Good evening, friends. This is part of a series that covers sector-specific or profession-specific impact of GST. And so today we'll understand how GST in particular impacts the HR community. Some pointers from my end. So this is Anurag Singhal and I'm here because I love to share the little I know. You can follow me by subscribing to this channel. With the GST breakthrough, India finally joins the list of 160 plus countries worldwide that have implemented or are in the process of implementing GST, and it's touted as one of the biggest reforms after Manmohan Singh unleashed economic liberalization in the year 1991. So the magnitude of reforms is that intense. Far-reaching impact on almost all aspects of business, be it pricing, supply chain optimization, IT, accounting and tax compliance systems. So then, if it's impacting all aspects of business, how can HR be left behind? And therefore, the scope of HR intervention in this will depend on the operating geographies, the size and the sector. But overall, the common theme is that HR is going to play a major role in facilitating people resources for the effective implementation of the transition roadmap. Now, how does this happen? So, for example, we will start off with specific taxation issues that have emerged. What is the scope of taxable transactions between employers and employees? Clause 1 of Schedule 3 of the CGST Act 2017 says that services which are provided by an employee to an employer in the course of employment are to be treated neither as supplier of goods nor as supplier of services. So, it's a lot of mental peace for us. So, any emolument or salary which is paid by the employer to his employee in lieu of employment is likely to be outside GST's ambit. Wow. But then, drawing this fine line between what shall form part of remuneration and what shall not shall certainly be a challenge for most employers. Because if you look at the employer-employee relationship, the GST law complicates this further by saying that in terms of entry 2 in Schedule 1 of the CGST Act, it says supply of goods or services made without a consideration between related persons when made in the course of furtherance of business would be taxable. I repeat, supply of goods or services, let's say by an employee to an employer, made without a consideration. So for example, if an employee of a company becomes a DJ for the night in a company event, so it's a transaction between related persons when made in the course of furtherance of business. So it's an activity which is done for employee engagement. So it would be taxable. And therefore the law deems that the employer and employee are related persons. So even if there is no consideration for the goods or services provided to an employee, the supply will still attract tax. So a lot of big four audit firms, rather taxation firms like KPMG or EY, still do not have any clue about what exactly will be the ramifications of this particular entry in the CGST Act. What is perquisite and beyond? So for example, mobiles or laptops which are given by a company to its employees, free of cost canteen services, transportation, gifts on the occasion of festivals like Diwali, Christmas. Now there is a dimension to gifts in particular, and cars with or without a chauffeur to employees. All of them are essentially supply of goods or services between related persons when made in the course of furtherance of business. Either way, so either if it's an employee doing something ex gratia for the employer or the employer doing something for the employee. As far as gifts are concerned, we have a limit of 50,000, but these perquisites are apart from normal salary and are usually considered on the larger prism of remuneration as they play an important role in employee motivation. So what is exactly in relation to employment is not defined under the Act. And therefore, we have no clue as an HR as to what is remuneration to an employee, and therefore with these gray areas, this might become a bone of contention between the company and the department in the times to come. As far as gifts are concerned, there's been a proviso which is added to clause 2 of schedule 1, clearly says that gifts given by employer to an employee during the course of a financial year under rupees 50,000 will not be considered as supplies without consideration. So far so good. But then, if I show appreciation in the form of cash rewards or vouchers as opposed to a gold coin, for instance, will it be a gift? Or would it be considered for services of employment provided by the employee? So the moment I change the nature of the gift from a gold coin to an equivalent amount in cash or a meal voucher, does it change the nature of the transaction? Will it come or will it not come within the ambit of the 50,000 limit? Then, as an HR, let's say I am taking a service of training or placement services from unregistered vendors. So a registered user availing services from unregistered user is liable to pay GST under reverse charge and then claim credit for the same. And there's a lot of clarity that still needs to emerge about how this reverse charge mechanism is going to unfold. So therefore the onus for the HR will now be to deal more with registered vendors. As far as sourcing, logistics and distribution is concerned, because India is going to become a one common market, so the idea is that the number of depots in the country will go down significantly, because it does not make any sense now to have a specific depot in each state, make a stock transfer under C form and then do a local VAT billing. Therefore, a lot of companies will now consolidate suppliers or vendors, rationalize the number of depots. So the entire network structure and the product flow is going to change, and therefore manpower might become redundant in many cases. So there was this latest news that in Mumbai, because Octro is going off, so there are these hundreds of employees of the government who are now staring at a blank future because they do not know what they will do, because their whole and sole job was to sit at those entry points and keep checking the documents. Now if that tax is abolished, what will they do? Their HR will have to play a major role. Now this is very wishful probably from my end, that there is going to be higher profits and therefore higher variable pay. So if you look at FMCG companies, they have nearly 28% incidence of excise duty, VAT and entry tax. Now that gets rationalized to 18%. And a lot of FMCG companies, for example Colgate, which was struggling against traditional Ayurvedic companies such as Patanjali, now become more competitive, because for Colgate the journey is from 28% to 18%, and for Ayurvedic products it's 5 to 7% currently to 12%, something which Baba Ramdev is now clamoring for, that he needs concessional treatment for Ayurvedic products. Further warehouse rationalization will happen, and therefore 200 to 300 bips of margins are going to improve. And in cases where variable pay is linked to company performance, higher company profits could lead to higher payouts for the employees. Wow. But this is subject to anti-profiteering clauses. What exactly this means? It means that the companies will have to ensure that whatever is the little benefit that they get from the GST regime will have to be passed on to customers in form of lower prices. And if you look at Malaysia's experience in 2015 on this front, it's very pertinent. Those authorities more strictly enforced anti-profiting mechanisms to curb potential profiteering that could arise in the guise of GST. Thus, you just cannot increase prices, and the authorities are going to actually expect you to reduce prices because of the potential savings that you're going to get from GST. This is what Nomura says, and which will work on this point of higher profits leading to higher variable pay. Now, as an HR, you also need to deal with wage expectations, both from the blue collar and the white collar function. Now, if inflation will become predominant, such as countries such as Australia, Canada, New Zealand, they had seen a one-time increase in inflation post GST. Yes, that got normalized in a year, but then in that 1 year, am I going to have higher expectations on the wage front? In Malaysia, CPI for the first 5 months marked increase by 1.2% as compared to the last year. In India, the beauty of the situation is that the current indirect tax structure that we have, so it has got very limited impact on the retail inflation as measured by the CPI, because the items that have a significant component in the CPI basket are exempt. So for example, 75% of the CPI is exempt from excise duty, 47% of the CPI is exempt from sales tax. So we do not really know how GST is going to play out in India. So if you look at this latest report by Bloomberg, basis a Nomura report, you can see that household goods are going to impact 3.2% higher. Health and education goods will get dearer by 2.1%. Same for services. Pan and tobacco 0.86%. Processed food 0.3%. Beverages are going to see come down, and overall CPI might go down because of all this by 0.33%, because fuel will be rationalized, primary food, personal care and furniture will see a dip. So how does the HR then deal with the overall impact? In case this is a deflationary situation, nothing like it. But what if in the short term you might not see that? So reduction in tax incidence as per Nomura estimates will lower the CPI inflation by 33 basis points. But Nomura in itself does not know that what will be the pricing behavior immediately after the GST implementation, because of the organized, unorganized sector mix in the country and the asymmetric pricing responses. So in the long term, the report says that GST will be disinflationary, but in the near term, this trend might not get reflected. So that is something that we need to understand. Now, in terms of what will be the impact of rate hike on services which are availed by the HR, such as training or placement, the 15% service tax currently gets replaced to 18% under GST. But since the entire amount is input tax credit eligible, so what is going to happen is that you need to ensure that documents are in place for an invoice level matching. Now, hitherto what was happening is that when I took input tax credit, it was just basis a declaration by me. But now what is going to happen is that the seller will need to upload the entire details of goods or services by the 10th of the month in GSTR1, and the buyer will then corroborate that in form of GSTR2 by the 15th of the month, and hence there has to be an invoice level matching. Only then you will get a credit. So now you have to further ensure that your vendor master database is completely updated with the GSTN codes. Once you make a payment, the vendor actually uploads the invoices correctly with complete details which is required for the invoice level matching, and only then you are going to get the credit. The rate of increase in service tax from 15% to 18% will only have a working capital impact. In fact, it is good because out of this 15%, 0.5% of Swachh Bharat cess was non-convertible, but here this entire 18% is convertible. Another thing that you need to see, for example, in case of services, that now it needs to be a state level registration. In each place of business where it lies in a separate state, you need to take a separate registration as compared to a service tax One India registration that used to happen before. So as an HR, you need to check the compliance of your vendors beforehand. Then how is it going to impact travel costs, trainings, conferences in terms of the tax rates? So now hotels and lodges with tariff below 1000 will be 0% rated. Transport services such as railways or economy class air transport or small restaurants will be 5%. Non-AC hotels, business class will be 12%. 18% will be the rate for AC hotels that serve liquor, telecom services, and AC hotels that serve liquor, and 28% will be the rate for room tariffs above 7500 5-star hotels. Now the good thing about this is that while rates might go up, but all of this is now input tax credit eligible. So hitherto what the VAT that you were paying, you would not get a set off for that. But now if a conference has been held in a hotel, in course of furtherance of business, then the entire GST which the hotel is now charging on the company can avail input tax credit on this. So that will be a upside for your budgets with respect to training and conferences and travel cost and so forth. But in case your employees who are in this zone who and stay in a Marriott, JW Marriott and so forth, they will have to shell out 28%. So the limits in terms of the daily allowances might need to be revised. So the classic case of this is also that the unorganized sector in the country, which is so prevalent, will have to undergo an effective tax correction practice. So hitherto that entire kacha economy will be substantially curtailed. So the price difference amongst the organized sector and the unorganized sector will be narrowed because of this parallel economy standing to lose its competitive advantage. Now what is going to happen is that, let's say you go to car repair and suddenly instead of 1000, the dealer says that he will now charge you 1300 rupees because the spares which were used in the servicing of the car now need to be procured under GST. And therefore his vendors are charging a higher price. Fair. So you say, okay, give me an invoice of the higher amount, a GST invoice, so that I can avail input credit. But he says, no, I have not yet crossed the limit of 20 lakhs, so I have not availed a GST registration. And hence, the overall cost gets increased to 1300 rupees. Will your employees press for revision of limits? If not, would it be better that you do it proactively? Maybe. I'm just leaving you with a thought. And thus, in case you've got any questions, please leave behind in the comment section and I shall be happy to answer them. Thank you.